So Savi here. This is the last but not the least video on being profitable trading cryptocurrency on an exchange. This is the riskiest but the most probably the most rewarding um in terms of how fast you can get rewarding, but you need to understand the logic behind it. So and this video is going to be about futures trading. Now, for futures trading, um is different from spot trading entirely, in the sense that with this you can use leverage, you can decide the margin in which you want to use. You can also use less than $10 to trade. Riskier but can be more rewarding. So now you can see that on our Binance here now we have um balance, or we have USDT on in our spot account. So take for instance now, we all have bank accounts now, right? For instance now, if you don't have money in your bank account, you can't transfer money to somebody. You can't recharge. You can't pay your bills with that account unless you deposit or transfer to that account. It's the same thing in this case now. So for you to be able to trade on the futures account, you have to transfer balance to it, especially since there's nothing in our futures account. So I'll go to futures, you can see there's nothing in it. So I transfer from my sports wallet. You can decide to transfer all, you can transfer any amount you want to use, but I'll be using max, you get. So I'll be using the maximum amount. So that's confirm. Let's confirm transfer. So that's the first step. If you had money there before, there's no need to transfer. If you just want to be using it, you can see it's a clean account. So you can decide to hide your balance or something. Depends on what you want for yourself. So we have two types of futures contract. We have the USDM and CoinM. The USDM means that when you trade, or after your trade profits, your profit will be given to you in USDT. While for CoinM, it means after your trading, your profit will be given to you in the coin you used to trade against USDT. So, and we all know that other coins move fast apart from USDT, which is one stable coin. So it's best to have your coin in stable coin than to have it in other currency, because other currencies are volatile, they move very fast, and you need to protect your capital. That's the first thing. So um let's go. So now that is the first step. So this is the futures wallet. So now let's go to futures itself now, the futures trading. So as you can see here now, this TRX already showed you already. So but I'm interested in, if you actually need to check on other coin, maybe you want to trade on other coin now, you just click on that TRX. So this is the favorite. I don't have any favorite, but probably the ones people trade the most. So that's all. If you want to check for all, you can see so many um coin here. So that's the ones that concerns us. So now we have the calculator here. Yeah, I think I'll come back to it. Yeah, I'll come back to the calculator. Sorry. So let's do the current one, the one we need for now. So now the calculator is the plus over division sign and equals to. So the ice now we have for futures trading, we have what we call margin. Margin is the amount you use to open that trade. The other one we have is leverage. Leverage allows you to be able to trade more than the margin in which you're using on that trade. For instance, now 20x leverage means that you can trade 20 times of that amount, or you'll be able to trade 20 times of that amount you're actually using to trade. So for instance now, let's say you're using $10, you'll be able to trade 20 times what $10 can actually trade for you. So that means you'll be able to make 20, like for instance, now if $10 is going to make you $2 profit, with 20x leverage, you'll be able to make $40 profit like that. You get, or yeah, so that for instance, now if $10 will naturally make you $2, that's 20% profit. You get now. So with 20x leverage, you may be able to make 20x of that amount, so that's 40x. So I hope you understand the logic now. So now we now have two different types of margin. This is the margin, isolated margin and cross margin. Now cross margin, I don't advise it, because what cross margin does is that you can see that now here now we have $15.83 in our account here now. I have it in my account here. So for cross margin, if maybe it is just $3 I want to use on that trade, and I already put my stop loss and everything, cross margin, it is not going to close the trade. For instance, if you are not online at all and then you just leave your trade, you already use your stop loss and all of that, and then you didn't check on your trades. If you now use an high leverage, maybe, okay, one thing I fail to talk about is that the higher your leverage, the higher your risk, but the higher your reward. So, but not to be greedy and to be able to stay long in this game, you need to be cautious and remove greed, because over time you compound your profit. Like for instance now, 30%, 20% every week is something. You get now. So that should be your logic about it. It's not about this thing. Two things is that you need to be profitable, and the higher your capital, the higher your profits. The lower your capital, the lower your profits. For instance now, someone with $100 will make $10 on 10%. Someone with $1,000 will make $100 on 10%. It's not Ponzi or anything. It's different. So that's it. So someone with $1,000 now that is target maybe 20% in a week, that's $200. That's 100, over 100,000 naira now. And you that you have $100, which is like 50 something thousand now, and they are making $20 in a week. That's how much? Like maybe like 12,000 or so, 10,000 or 11,000. You get now. So you already understand the logic. You get now. That's what the higher your capital, the higher your profit. If your profit is, if your capital is little, what you'll be able to do will be little too. You get now. So, but you can definitely compound it over time if you're not greedy. For instance, now someone that is making $20 every week now, and probably maybe at the end of the month now, with $100 now, at the end of the month you withdraw $30 out of it, and then you leave $50. The next month, $150 now. You can definitely increase. It can increase over time. You get now. Once you start to master it. So the next month now, you do 150 to um maybe every month, maybe it's now 30%. Like that, like that, like that. You see that you start compounding the money like that. You start compounding it. That's why it's not a get rich quick scheme, but it's something that if you master it, you'll be profitable. Someone with $1,000 now that is making 20% every week, that's 20%, that's $200 times 4, that's $800. The person does not even need, probably does not need to work again, because his money will be working for him. You get now, that's like over 450,000 or so, 450,000 naira. The person can decide that, oh, let me just withdraw um maybe just $300 out of it. That's 180 to now remain 15. So it's going to start with 15 again next month, just to start trading that 20% every week again target. At some point the money will get to like $5,000. You understand what I'm trying to say? So it is not Ponzi, and you need to be um cautious about how you trade it. So that's basically. So for the cross margin now, you know it is it's not advisable. You get now. So if you are not off online, and then your total money is 15.83 as we have it here now or something, all that money is going to go, especially if you use high leverage. Your low leverage is possibly the one that will save you. You get now. So Um now this thing, that's that on cross margin. Then for the isolated means that is the margin or the leverage you use that is going to work for you. So for instance, if you set your stop loss now, it means that is once price get to that stop loss is going to close the trade for you. So for instance, now in this our trade here now, in this our signal here now, we have 0.059, the stop loss is 0.6%. The stop loss is 0.6%. You get, that's the stop loss percentage. So in this case now, we can decide to use 5x isolated leverage. That is, we can trade 5 times of what we can actually trade. So for instance now, also I failed to mention that it's your stop loss that determine your risk, the amount you are risking. So for instance now, me now I have $15 on this account. We have $15 on this account now, and I just said, I told you that it's 3% that I like to risk, or maximum of, let's say, 3%. You get now, or maximum 5%, because this account is small. You get now. So now in this case, with my stop loss with 0.6, it means that 5x leverage would actually means I'm losing 3%. I'm making 3% loss of this account. How do you calculate it? 5 times 0.6, that is 3%. It means that I'll be losing 3% of this account. That's 3% of $15, which is like 0.35 or 0.45. You get now $0.45, just $0.45. Let's say I want to use, I'm using $1,000 to place this trade now. So which means, let's say with that $0.6 this thing. So that's, it means that I'll be losing 0.6 times 5. That's what, 3. So 3% of $1,000 is $30. If it is $100, 3% like that is $3. So if my stop loss maybe 1% now, let's say my stop loss is 1% and my target is just risking 3% of my account, like it's just 3% loss I want to make, it means I will have to use 3x leverage, because 3 times 1 is 3. I can't use more than 3x leverage because it's part of my trading plan. You get now. So that's why I said your stop loss shouldn't be more than 1%. You get, or no more than 2%, so that maximum you'll be able to use 2x leverage to at least make 2 times of the profit you will make with spot trading. You get now. So that's the logic. You get. So that's something you should actually take note of. So it is your stop loss that determine your risk. So now we've already safeguarded our capital already. Like, okay, we know that it's 30% loss I'm going to be making. Before you now start thinking of profit, that okay, now the first one is 7.9% profit. Now with my 5x leverage, now 5 times 7.9, that's like 5 times 7.9 is, I think, like maybe 39 or 38 or so. So that's 38%. So with, let's say with that $1,000 that I am actually risking just $30, I'll be making $380. With $100 that I'm risking $3, I'll be making $38 if it gets to that TP. You can decide to close before then. You get, so far you're okay with the profit. If it's your 20% that it has gotten to, and you're okay, you leave it. You can go to the next trade. And I already explained a strategy for you that, okay, let's say you achieve more than your targets in that week. What do? It is the extra income on it that are going to be using to trade for the rest of the week, or any trade opportunity. You get now. So it's important that you are smart with this. But I can assure you that there's a lot of money in this. I've seen people that actually built accounts from $10 to a reasonable sum. But you need to be remove greed, and also like safeguard your emotions. You get now. So I've seen people that built it to a reasonable sum. Some built from $10 to like $500 in a month. You get now. It's possible. The only thing about that one is that you have to increase your risk and try trading. Check it, but most of us have jobs and you know we wouldn't have time. That's why I've been so specific about having targets and all of that, in order not to put pressure on yourself. You should just be like extra income. And those of us that want to take it very serious from the moment now, we know that we have to put in effort. Those of us that have work jobs that we do now, we know that we know, okay, what the service say today, okay, let me just trade it. Once your 20% is done, you go back to what you are doing. But probably those of us that really don't have something that we are doing now, that want to really put so much focus on this, the energy we put into it would be more, and our targets might be more than what others are actually hoping for, others that have other sources of income. So this is something we need to actually understand. So I already made mention of the isolated match. So in this case now, I will be using 5x leverage. So this is how you set it. I don't have business, so this, you can see the highest leverage is 75, which means that what 75 leverage means is that, okay, let me explain how it works for you guys. So what let's say 10% leverage now. It means that if price should drop more than 10%, I'll lose all my money. You get? So 10 times 10, that's 100% loss. If price should drop, if I use 20x leverage and price drops by 4%, if time by 5%, I'll lose on my 100%, my $15. If I should use 50x leverage, this means that if price should drop by 2%, just 2%, I'm going to lose all my money. If I use 75x leverage, it means if price should drop by 1.25 leverage, I'm losing all my money. So you can see how this thing it can be now. I'll probably be placing a live trade very soon also. So now I'm just waiting for it. Okay, so that's it. So that's why I told you the essence of, so with my 5x leverage now, I already set my stop loss now, and my stop loss is just 0.6% drop. So 5% naturally means that the coin has to drop for 20% before I lose my whole money. But now it's just dropping 0.6, so it's just 3% I'm even losing. So it's not even that significant. So 0.6 now, so you confirm it. So the same way we did for this thing, the same way we did for the spot trading. So most times you make analysis for futures, most times it is always limit orders. That is, you buy at a later price, because you have to wait for price to get to where you want, so that you can have a tight stop loss. You get? Now you don't just chase price anyhow like headless chicken. So market, you want to buy at market, you buy it at market. You buy at market if you wish, if that's what you want. Like you want to buy that 0.06033 now. So the stop limit order too. Okay, you don't need that. Okay. So just limit. Okay. The trailing stop. I don't want to bother you guys with that one. Even me, I don't use it. So limit order now. So I want to buy at the later price of 0.0600. So 100%, that's the amount I want to use for it. So so that's it. Limit order already. TP, you can put your TP and take profit for this one. So okay, one thing I failed to mention is that in futures, if you are buying, you are buying. If you are selling, you are selling. So that, I made mention of the fact that in futures now you can sell and buy. So for instance now, if I want to trade and I say that, okay, this coin is going to sell aggressively, you're going to sell, you get, like it's going to sell very well. So what do? I'll just put this thing, I'm checking this price. So I'll just put that, okay, it's going to sell at so amount. I have to put this order, sorry, 0.06. So I want to show you guys how this thing works. sorry, 6470 0.065960. So this clip, I'm placing a live trade now. I'll be using 75% of my Amazon. That's 11.88. So buy is buy. I want to buy. So sorry, 0.5960. So buy long. So you can see now. So I already bought it already. So what this means that if price should get to 0.0600, my order will start, price will start moving for me. You get now. So now, if it is sell, let's say I want to sell, I want to sell now. Sell limit means that I want to sell at a price higher than the current market price. You get higher or lower, anyone you wish for. So let's say I want to sell at 0.06050 now. You get now. I'll just set my take profit. If you want to sell, it means you want price to go down. If you want to buy, it means you want price to go up. So sell price now, my take profit will be less than the amount in which I'm selling, the amount I want to sell. You get now. While my stop loss will be above price. So for instance now, yeah, sorry for the breaking transmission. Um so for instance now, oh man, already sorry, I'm coming. All right, so let's say it gets to this point here now. So we just we sell it, and um we wait for the order to trigger. So you just put your stop loss and price and the likes, you get now. So that's just the logic behind the selling too. So you can sell at market or sell at limit. You get. So for the calculator now, let me go there. So let's say PNL, you want to know how much you'll be able to make now. So my trade, I'm going to mirror my trade here. 5x level, entry price 0.06000, exit price 0.596. Oh, sorry. So you can see now, let's say I'm calculating for my stop loss. Because of my stop loss is not exactly 3%. You get. So that's why you can see my stop loss will be minus 3.33%, which is just 0.08. So for my take profit now, which is 0.00647, sorry, 647, sorry, I'm coming, which is 0.00647, calculate. You can see now 39.17% profit. You get. The thing that we actually did that was I think 7% or 7.9% or so is now 39.17. Now imagine I'm using a very very large amount, you get, on this trade. Let's say like $100. So I'll just be losing $3 to make $39.17. $39.17 is like over 20,000 now. So you get now. So you can decide to calculate orders to target price 5x, entry price okay. I don't want to bother you too much about all of this, because but this is how you calculate it. So assuming my trade was actually opened already, I would have shown you something. Yeah, okay, you can do it here too. Let me see. Okay, no, it has to be open where you can actually adjust your stop loss and your take profit. So probably in another video, I'll probably show you that.